Here we are using a primary position as well as a secondary position, just like in our investment model. We will use same $10 capital on both positions. Hence the total investment would be $20. Stop loss is -1% and target is 1%. Since leverage used here is 50, we can assume a 50% loss on capital for every SL hit and 50% profit on every target hit. So if price moves up by 1%, we will gain 50% profit on primary side, whereas 50% loss in secondary side. Similarly, if price moves down, we will lose 50% on primary side and 50% on secondary side, right? Hence the total asset value at those levels would be the sum of compounded capital from each side, which would be $20 here. That means we are still at no profit, no loss on. But what happens if price starts to retrace back after hitting these levels? Reaching a particular level will cause 15% loss in our invested amount. This would be our strategical stop loss point. We will immediately exit all our positions at such a case. Similarly, on downside also, we will have similar level. We'll do the same on there also. Now, instead of retracing back, suppose price continues to rise or fall. So it reached level 2 from level 1 directly. Means 2% change in price from our initial entry price. At that level, profitability would be like this. Hence, the total asset value would be $25. And we are at 25% profit now. I hope you got this. Again, if we consider such a condition of the price to retrace back from level 2, we will hit another strategical stop loss level where we will have to book a loss of 15% on our capital deployed. Same for downside too. Finally, if price doesn't retraces back and continues to rise or fall till level 3, which is 3% change in price from our initial entry price, the positions will be at 75% profit and we can easily exit those positions booking that profit. Means those levels would be our strategical target levels. Hence, briefly saying, if price rises or falls just 3% from our initial entry price, we will have two probabilities. Probability number 1, to book 75% of handsome profit on our capital. Probability number 2, to book 15% loss on our capital. But since profit is very much bigger than loss, we can keep an effective risk to reward ratio of 1:5 in our trading strategy.